Hello, in this presentation we will record the transaction related to the receipt of inventory with a bill into our bookkeeping problem in Excel, keeping in mind how that same information might be input into accounting software such as QuickBooks. If you would like more information about the QuickBooks Pro, take a look at our comprehensive course in the link below. This is the second time we'll be looking at this with a second bill. We'll go a bit faster for that reason. If you want more detail, take a look at the first presentation for that. We're going to take a look first at QuickBooks really quickly and go through that, and then go to our Excel sheet and record this information. First, taking a look at QuickBooks vendor section, we see that what we're doing is clicking the second item in the flow chart, which is the receive inventory with a bill. That is indicating that we have already entered the purchase order. Remember that the purchase order means that we're requesting inventory from the vendor, and we have not yet paid for the inventory and we haven't received it. So there's no transaction in Excel at that point in time, but it is a form generated within QuickBooks or accounting software, any accounting software, and we can then use that form to tie out to when we receive the inventory to check it out. Remember that that is a little bit different than most of the times when we buy something online where we have to pay for it at the point in time that we purchase it. In this case, we are requesting it and we're able to get the vendor to ship it to us before we make the payment. We're going to check it and then make the payment. So we've already ordered it. It's going to be a guitar, and we have received it now. And now we're going to say that we're receiving the payment. We're going to imagine opening up the guitar, and there's, of course, the bill in the guitar. We are then going to record the fact that we have inventory and this bill. When we do that in QuickBooks, we can put the bill here, and we're going to put in this case, the vendor Epiphone. And QuickBooks can then tie that out. It can say, okay, you already have a purchase order there. Would you like us to use the information for the purchase order to populate the bill and tie all that information together? Something we cannot do typically in our Excel problem, but something useful to do within the software. So we're going to say yes, of course, and then pick the purchase order that we used to order this guitar from Epiphone. And there we have it. It populates automatically then. So now we're going to say that it looks like a check, but this is the driving document to record the transaction that will be recorded by the accounting software. Everything was pretty much automated. Looks pretty simple to input this information. We've got the vendor, we've got the date, we've got the amount, and then we have the information that just automatically populated once the purchase order was generated and then connected to this. That being the item, the type of guitar. The code for it is an ELP. It's going to be an Epiphone something, and then it's going to be a quantity. We got 3 of them, and they all cost $400, and therefore we're going to we owe $1,200. This transaction then means that accounts payable is going up, and it means that the inventory, the guitars, and are going up as well. That'll be the transaction. Once we, in the software then, QuickBooks will also track who we owe, meaning Epiphone, and it'll also track the inventory on hand and which inventory items are there using an average method. We will have to do those in our worksheet with subsidiary ledgers. We're now going to record this in Excel, and we're going to say that what happened in essence, if this was a book problem, it would say something like, we purchased inventory on account. And that means if we heard that, we would say, well, is cash affected? We're going to say no, because it has that term on account. And that means that we haven't paid for it yet. Remember, we're imagining we got the guitar with a bill in it. We already ordered it. Now that it arrived and it's got a bill. And so cash isn't affected. It's going to be something else. I would typically think of what we received then, even though we know it's going to be accounts payable, because sometimes people get mixed up as to whether to debit or credit accounts payable. I would then think of, what did we get? We got inventory. Inventory is an asset similar to cash. It has a debit balance. We got more of it, so it's going to go up. So we're going to do the same thing to it, which is a debit. So if we do that, I think it's a little bit easier for most people to figure out. So I'm going to copy the inventory, and I'm going to scroll down, and I'm going to go down to 2/14 and cell A20. That's going to be the date. And we're going to right click and paste 123, the inventory, and that's going to be 1,200. So then we're going to credit something for 1,200 as well. It's not going to be the checking account. Cash isn't going down. The good thing is not going down. What's happening is the bad thing is going up. That bad thing, the liability of accounts payable. So accounts payable, we know we're going to credit it because we debited the inventory, but let's think it through. Accounts payable has a credit balance. We need to make it go up. The bad thing's going up, so we're going to do the same thing to it. That then, a credit. So we're going to copy the accounts payable. We're going to put that in cell B21 and right-click, paste 1, 2, 3. We'll then go to the Home tab. We'll go to the alignment and increase the indentation. This is the journal entry we have entered into the general journal through the journalizing process into the general journal. Then we're going to do the process of posting this to the general ledger, that then used to create the trial balance, which will then in turn be used to create the financial statements all automatically. So we're going to have the inventory here. That's going to be up top. So we'll go inventory, third account there. It's going to be the third account, therefore, on the general ledger. Let's freeze the panes, make this a bit easier. Freezing the pane lessens the pain. So we're going to go up top to AJ1, and we're going to go to the View tab, and we'll go to the Windows group and freeze panes to lessen the pain of posting, and freeze panes. Then we're going to scroll down, and we're looking for inventory third account. So inventory is the third account. There it is. Scrolling down, and we have AQ25. We are in cell AQ25 equals, and we're going to point to that 1,200, bringing the balance up from 2,113 by 1,200 to 3,313. That then can be found on the trial balance. Here it is, 3,313. Is that what I said? 3,313. Okay, looks good. Next, we will go back over here. We're going to post the accounts payable. There's the accounts payable. Here's the accounts payable here. First orange account, first liability accounts, which are the orange accounts. And therefore, it will be the first account on the general ledger. So let's look for them. We have all the assets in green. First liability account there in orange. We are then going to go to cell AZ16. AZ16 equals, then point to that 1,200, bring in the credit balance of 168 up in the credit direction of 1,200 to 1,368. We will double check that that same 1,368 is over here on the trial balance. As it is, there it is there. So we've posted it now, but now we need to post the subsidiary ledgers. Why? Because this accounts payable tells us that we owe people money, but in order to write a check to those people we owe, we need to know who we owe. We need this broken out not by date as it is in the general ledger, but by vendor, by person we owe, or companies we owe, or both. And the inventory, same thing. We have inventory up top. That represents the amount of guitars we have, but it represents it in dollars. And we need to back that up and represent it as well in terms of guitars. So we're going to do that. We're going to go through that. Let's do the accounts payable first. So we are, in essence, just recording the same journal entry. I am going to stop saying in essence. We're going to record the same journal entry to the subsidiary ledger. So we're scrolling back over subsidiary ledger, and we have Epiphone. So there's Epiphone. We're just going to record the same journal entry. It's basically another subsidiary ledger here. So we are in DA9, and we're going to say that that equals, and we're pointing to this 1,200, and that's going to increase this balance to 1,200 that we owe to Epiphone. If we add up all the vendors, that adds up to 1,368. Let's go all the way back and double check that that's the case on the trial balance. So we're scrolling all the way back to the trial balance. Scrolling all the way back. And we owe 1,368. So that looks good. Then we're going to record the guitars on the subsidiary ledger in tracking our inventory. So let's go all the way back over here. Probably could have done this. So here we are. And fortunately, I think this is our first one because we got an ELP. So that's the first one, ELP. That's our main one. That's the one we buy a lot. We sell a lot of those. So we're going to be here, and we're going to say that this is on 214. The quantity will then be 3, so we got a quantity of 3, and we're going to say that they all cost $400, $400. So we're going to multiply that out then by saying equals point to the 3 times point to the 4. 3 times 400, 1,200. That should match what we paid, of course, down here. So that's what we paid, 1,200. We also want to put that in ending inventory. That should be part of our ending inventory over here. So I'm just going to put the same information. I'm in CN9, and I'm just going to say this pulls over. I'm just going to say that equals the same 3. And then next to it, I'm going to say that equals the same 400. And then we're going to multiply that out. This equals the 3 times the 400 and enter. Now this is the average method. We should be using the average. Note that we know that they're all going to cost 400 because they haven't deviated. But if they were to change in price, we would do the average method calculation. So let's do that now just to get practice. I'm going to underline this. I'm going to go to the Home tab. We're going to go to the underline and go here and underline this. So what we have here is what we have 4 units. We got the 3 units we have here, and then we have 1 unit left because prior we had 2 units, then we sold this one, and then we have 1 unit left, and now we have another 3. So we're really only working with these 2 rows right there. We need to sum those up. So what we can say here is we could say that we obviously have 4 units. I'm going to sum them up on this side equals SUM and CN10. Double click the sum function. The 1 and the 3 is going to give us the 4. We're not going to sum this up because that would give us 800, and that doesn't make any sense because these are the unit costs. We're going to sum this side up, which is going to be the total cost, 400 and the 1,200. So this is going to equal the sum, double click the sum of the 400 and the 1,200 and enter. And then what we're going to say is if this is the total cost and this is the number of units, and we divide them two out, this divided by the 4, we will get the average, which of course will be 400 because nothing's changed here. So we're going to say this equals the 1,600 divided by the 4 units. So remember that in a book problem, these numbers would typically change over time, meaning the price would go up. It would happen in real life as well, but some types of products may stay static for a longer period of time than others. Some may vary a lot. And therefore, we can use a couple different methods. If we're estimating, we can use LIFO, average, or FIFO. The QuickBooks desktop typically uses average. That's what we're calculating here. Remember that you cannot just add these 2 up and divide by 2. You could this time because they're the same, and you'd get 400. But you couldn't do that if these were different numbers, meaning we bought something at a different price later, because we have 3 of these units rather than just 1 of these. Therefore, you have to calculate the total and then the total and divide it out, and that'll give you the weighted average, which is what we're looking for. We then need to fix our formula down at the bottom too. So we're going to scroll all the way down. This formula down here, we're going to double click on it. Scroll all that back up. It's not a sophisticated formula, remember, but it's nice and simple. So we're going to move this down. So that's going to the wrong cell. It's going to CP8. We need it to be going to CP10. So we're just going to delete that 8 and put a 10. And that looks like it's going where we want, and enter. If that's confusing, again, you can just delete this whole formula and just do the whole thing again. Just say equals. And I want to point to the last number in each of them. I want to point to this one. That's CP10, and then plus, little plus sign. Then we want to point to this one, plus, looks like that. And then this one, plus, looks like this up here. And then this one, plus, looks like that. And so on and so forth. The second one, plus, the second one, plus, the second one, plus, the last one, and enter. We get 3,312. Let's go back to our trial balance and see if that's what we have over there. We'll do that a bit faster this way, and what we're going to do is just put our cursor on this side of the split frame, which is right here, and then go to the right, and it'll just pop over there. So we'll go to the right, and there we go, and we're looking for that 3,313. Looks good. Now we'll just take a look at the financial statements, which were automatically generated from this process. We changed the inventory, so I'm going to go and see what happens there by clicking this. That's going over there. And we did something to the payables, so we'll click this and check those out. We're going to go all the way to the right and see if we're still in balance. Let's unfreeze the frames first, though. So we're going to go to View. We'll go to Windows, Freeze Panes, and unfreeze the panes. So the pane has been unfrozen. We're going back to the financial statements. And there we have the inventory asset. There we have the accounts payable populating automatically the totals of the total assets equaling the liabilities and equity. So that looks good. No effect on the income statement as we bought inventory, but we have not yet sold it and therefore not recognizing the expense of cost of goods sold, which we will when we sell it, or the related revenue of the sales at this time. Still have the loss of 346. That 346 found on the statement of equity as well, part of the calculation for the ending equity of 143,829. That amount also found on the balance sheet.